Good afternoon, everyone. Juan Finance here. Thank you for coming back. And in this video, we're going to cover the top performing money market funds as of July 2020. So here's a very short disclaimer. And these are the main features of money market funds. So they're classified as low risk, low returns, and therefore intended for conservative investors. And the ideal investment horizon is at least a year. So here we have the peso currency. So we're going to cover peso and dollar in this video. And then here we're looking at the benchmark, which is the 91-day treasury bill or the 3-month government bond yield. So before, like 1 year ago, okay, at this point here, that's exactly around 3.7, 3.8. And now, or as of July 31, it actually dropped to around 1.1%. So if we're going to look at the before, COVID level, that's around 3.3. So you can see there a massive decline due to the impact of COVID in the economy. So if your current investments, time deposits are actually earning above 1.1 or let's say 1.2% gross per annum, then probably that's going to be okay because it's performing above the benchmark, which is at around 1.1 percent gross per annum. So here we have the 1 year historical net returns of the money market fund. So these funds are actually combinations of the mutual fund and UITF. So here we have ALFM money market fund performing at 3.64%, BPI Invest Money Market at 3.40, you have Sun Life Prosperity at 2.9, you have CTBC Money Market at 2.8, and Diversity Money Market Fund at around 2.5%. So our top performer as of July is actually ALFM Money Market Fund. And what if you have 100,000 in your portfolio? So these are the corresponding returns. So for ALFM, you got 3.6, or let's say 3,640. For BPI Invest, you get 3,400. For Sun Life Prosperity, that's around 2,900. For CTBC, it's 2,800. And for Diversity, that's around 2,500 pesos. So let's try to go deeper to the ALFM money market fund prospectus, or let's say disclosure statement. Now we have here, this is the 5-year performance of the fund. And if you're going to look at here, this is the benchmark, the 91-day treasury bill, plus the 25% of which is the BPI Philippine Government Money Market Index. And it actually shows that the fund, the ALFM money market is outperforming the benchmark. So notice that distance from the gray line of the green line. So that's, this particular distance is actually indicating that the fund is performing better than the benchmark. So cumulative performance, let's say 1 month. This, by the way, this is as of June. This disclosure statement is as of June because the disclosure statement for July is not yet available. So this is as of June. So that's 1 month ago, 3 months ago, or 6 months ago. These are the net cumulative returns. And what if you invested a year ago? That's around 3.77%, and so on and so forth. So the portfolio composition here, we have around 52% corporate money market. So it covers, let's say, uh, corporate borrowing, short-term borrowings. You have commercial papers. And here we have around 13% of government securities. It covers around treasury bills and maturing, let's say, treasury notes and bonds. And here, this is among the important statistics that you should know. That's the weighted average duration is around 0.56. So if you convert this one into years, that would mean that the recommended horizon for this fund is around 6 to 7 months. Okay, so that's the recommended horizon current number of holdings are 114, so meaning you're buying 114, let's say, combinations of time deposits and treasury bills inside the portfolio of ALFM money market. And your top 3 holdings are here: time deposit, you have Philippine bonds, and time deposit again. So let's jump to dollar currency. So the benchmark, we have here the 3-month government security of the US. So a year ago, that's around, I think that's around almost 2%. Now it's around 0.099. And before the COVID, that's around 1.6. So again, this major drop here is triggered or caused by COVID. So since money market funds are secondary instruments, they react the opposite. So if you're going to look at even though the benchmark actually um, in a downward position, majority of the funds, I mean, almost 90% of the funds are actually performing the opposite way, which are, you know, going uptrend because they are secondary market instruments and they have inverse relationship with interest rates. So here you're looking at dollar. So you have the Metro Dollar Short-Term Fund at 1.6, Sun Life Prosperity at 1.61. You have the BPI Invest 1.57, UCPB Dollar you have 0.96, and the PNB Global Filipino at 0.90%. So our top performer, we have Metro Dollar Short-Term Fund. And what if you have $10,000 in your portfolio? So if you invested a year ago, these are the corresponding returns. So for Metro, you have $162. For Sun Life, you have 161. For BPI Invest, that's around 157. For UCPB, that's 96. And for PNB Global, that's around $90. So let's try to go deeper to the details of Metro Dollar Short-Term Fund. We're looking at the fund outperforming the benchmark. Okay, this is the performance of the fund, the blue line here. And the weighted average duration, this is pretty much high. That's almost 1 year. This if you convert this one into years, it's almost like 10 to 11 months. Okay, so that's the recommended length of time that you should, stay invested in this fund. So this is also the main reason why the fund is performing, better compared to the competition because the duration is actually very high. And then here we have the cumulative performance. So by the way, this disclosure statement is actually as of July 2020. So as of, let's say, if you stayed a month or 3 months or 6 months ago, these are the corresponding returns. And what if you invested a year ago? That's 1.625%. Okay, so the portfolio composition, if you're going to look at 80% of that, is actually more on time deposits. You get 10% corporate bonds. Now these bonds are actually maturing. It should be maturing less than 1 year ideally because these are classified as money market. And the top 10 holdings you have here, yep, a bunch of them are time deposits. You get ROPs here. And then this is actually very aggressive one, positioning because this ROP is maturing 2025. But again, since majority of them are actually still less than a year weighted average duration, so this is still um, good indication of portfolio holdings. So a quick run to our sources. So that's all for this video. Thank you very much for watching, and I hope that you learned something. Please do like the video, and if you want others to understand, kindly share this video. And if you need to know more, kindly subscribe so you won't miss any future videos that we're going to make. Thanks for dropping by.